We are back again. You already knowing what it is. Come on down and get them Hollywood trades. We are back live with gold. It's been a while. Been pretty much preoccupied with other things, as I always like to say on these streams. Other than that, gold has been in its bearish mode, or as I would like to say, preparing for its yearly or quarterly dissertation. What we have at that point is the ending of the yearly candle. Just like any other candle, you have a wick at the end of that candle where price really doesn't incur or absorb too much liquidity one direction or another, because it's pretty much put the yearly high in at this level here. So with that being the case, we will not, this will become a target once the new year candle starts. If we do get close to this, which I do believe that we will, and no, actually, I am mistaken. This is the yearly high level. We will approach, I believe we will range between this bullish impulse range here, so here to here. Like we'll range from here to here. This whole range right here is the wick range. So it's gonna be doing some algorithmic type of things here where we will just see, creation of blocks and breaking of blocks, breaker blocks, manipulation blocks. We'll be seeing all kind of crazy situations coming up here. This was the daily balanced price range. So this was this is where the daily imbalance resided. That was the most of the issue. And once that daily got corrected, you see during that session, we came right back down. And then this is for the higher time frame traders, this was a bearish entry to come back down to this array. We did get caught by the Reaper as well as rebalance this whole entire range. So this was an imbalanced range. This whole range had a few imbalances here, little ones here, and then a few right up in here. We began to rebalance that, and then this block right here, this propulsion block, was responsible for holding us to make sure we did get all of this rebalanced. And then as we see now, we are able to come back into that propulsion area with a clean CRT targeting of the high of this block that dipped into this. It failed to close under that block right there. And so what do? We target the high of that, boom, and then where all of this is just consolidation range. This is a propulsionary range. We will see the 50% of this range be some type of resistance, as it has been. This actual block, these levels are something, but they're more so responding to the mid-range of the liquidity that exists in the premium half of this propulsion block, right? So we should and maybe will see, right now we're getting 5-minute order blocks being able to hold the price up, bullish order blocks holding the price up. This is a propulsionary range. This block did not absorb any highs. There were no highs absorbed here. So all of this will somewhat act as a it's sort of a magnetic zone right here, because there are a lot of highs here that haven't been swept. So I'll change a markup here. And since we are in this range now, we're going to start to focus. What we have as far as liquidity to raid. And this is liquidity that is very much able to be raided, unswept, 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 unswept into an FVG. And I've been loving to mark these FVGs that have that low resistance type of liquidity leading into the FVG range. So this is my whole idea as of right now. A lot of you know, once I start marking these imbalances as targets, we can pretty much bet that those are going to be hit sooner than later. Sometimes they do like to wick these areas before the FVG to leave like a really nice relative equal high before we get to these areas, and they'll come down, absorb some more FVG, and then slam back into it. Those are manipulations. If that does happen, all you can do is play it. Don't be too greedy. You know your options. If it does start attacking lows, then be sure to be nimble within these ranges. That is the only thing you have in your arsenal in these ranges, is being nimble and being quick to see what the shifts are. Definitely, I'm encouraging my Discord to trade those 5-minute order blocks for your 50, 100 pips. Trade those 15-minute FVGs for your 100 pips and get out. I've been encouraging that because they've really been tricky in these areas. There's not a lot of institutional kind of huge money kind of playing around. And if they are, they're scalping as well. So, definitely be nimble. If you see those 5-minute order blocks, as I've been saying in my own notes, because I've kind of had the tendency these last few weeks trying to get this 150K account eval with Top Step finished. I've had the tendency to try to trade through, fresh blocks, like fresh 5-minute, right? So if we're bullish like how we are now, right? I would try to what I've been catching myself doing, just trying to really get some revenue under this eval. I've been catching myself, like, for instance, I mean, this is one right here, right? But this is definitely more of a proportionary block. But for the sake of the matter, let's just say, right, we could go bearish here, right? And we could attack this FVG right here, which I believe we should be doing. However, if I did want to trade short from here, why, right? The main question is, why would I try to trade through this? And what would make me, not saying that you shouldn't trade through this or try to enter and trade through this, but why would you, and what would make you, right, try to trade through this? Why do I want to trade through this? Do I want to trade through this order block? But for most instances, you want to use this as an entry to take profit at these highs again. For most instances, that's what you want to do. You want to use this mean threshold level right there as an entry, and then you want to attack this as a take profit, and that's already like, it's like 80 pips or something like that, something stupid. So, if you can get a free 80 pips, you're bullish right here. I've been catching myself trying to trade through these for a deeper, right? Like a Fibonacci, like, oh, I'm going to attack that fib level. But if you catch a propulsion block or an order block of any sort, yeah, you could trade through it, but usually you want to use this as an entry. So what would make you want to trade through it other than like just trying to force a trade, or not being emotional, but being like, better, like your brain power is better, like your brain power is telling you that that's the thing to do. And that could be the case, but in a lot of cases, you will fail trying to trade directly into an order block. So that's just not the case. And so pretty much I really just been watching these lower time frame order blocks. And of course, right, if we do get a bearish order block here, we definitely do attack lower. And for instance, right, so like I said, you can trade through an order block, right? You can potentially trade through an order block like this. Like, this was a bearish order block right here. And yes, you could have traded through that bearish order block but with the help of a clean Fibonacci visit, right? And so this was the stronger range. This range broke structure here, right? Right there. And then you, after you break structure, you measure your Fibonacci retracement. So that's from this high to this low. That's a clean break, right? So after you get that clean break, you can use that golden level right there, plus your imbalance correction. And then this is an order block as well, starting here, and a breaker starting here. So you have your breaker, you have your FVG, and in your OTE or your Fib golden zone, that's a unicorn entry right there. Sometimes very hard to spot on go because they're not super clean. There's all kind of like mitigation blocks and different things that happen in between. But if you just stick to the main like 1, 2, 3 structure breaker right here, this is your main bearish order block. That bearish order block catapulted price. It rated that block. It didn't use that. It did kind of halt price here for a little bit, 1, 2, 3, but then it rated that block, right? And then broke structure here, and then came back to that block, and then right, FVG clear, discount range. It wasn't a dramatic response, but you don't need that dramatic response. What you do really get though is you're gonna start being able to trade through those blocks at that point, and then you're already up 100 pips by this point anyway. So you could have just taken this trade to this right here to the block and made your 100 pips and been done for the session. Like I always say, 100 to 200 pips, you're pretty much done for the day at that point, in any decent sized account. So just staying safe in these ranges. We knowing that we're already up freaking like 300 pips, right? In a matter of we're looking at the 5-minute chart here. So in a matter of a few minutes, a few 5-minute candles were already up 300 pips. You're done for the day. You should be done for the day anyway. Trying to get those crazy 600 pip trades. I mean, that's just, maybe if you're trying to grow a small account, but if you're really just in that, either in that eval or in that funded, or you have your nice little 5-10K account and you're trading 0.25s to 1 lots, I mean, you're pretty much god tier level at 300 pips on a session. So with gold being able to give 600 pip expansions in a matter of a few hours, you don't need to risk it in this range. That's what we're gonna say at this point. So that's all I have for right now. Let's look at the daily one more time, because we haven't reviewed the daily in a few weeks here. But pretty much, like we said right here, there was that low resistance liquidity on the way to this fair value gap. What we have here now is a balanced price range. So what we have here now is showing support. Is showing support in this range. What I'll do is do a special markup. Let's let's mark this whole FVG, right? Oh, once you look at that, it's sitting in the golden range of the imbalance, but that's some secret society stuff right there. Let's go ahead and do just let's do this, right? So it's using the lower half of the discount range. So the discount range is separated into half, right? So below this is the discount range. Separate that in half. It's you. That's an algorithmic thing. Like the robots won't allow it to close below that point on the daily. So I would say this right here is this whole range of support, and it will use this level right here as its plumb line, right? And then we have a bearish FVG here that clearly needs to be resolved. And so this is the CRT high. So what we'll say is, for right now, that's the target. Right now, for right now, this level will be the CRT target. Actually, you know what I'll do? I'll actually make this a CRT type of deal right here. And then we'll keep that on the chart. So zooming in on that, very difficult to zoom in on, but you can pretty much see what we're looking at there. Let me, too many markups for me actually. So I'm going to take that there. Now that we have the CRT range in motion, that's pretty much it right there. And that's all I have. I can mark what I will mark. I don't want to mark that FVG. It's just too much on the chart for me right now. But I will say that this level has not been touched, which it needs to be touched. And yeah, that's pretty much that. You see what happens when you get the balanced price range here, come back down, balance this price range, come back up, balance this price range. This is a wedge. This is what would constitute a wedge, right? You get impulses, smaller impulses, and then rebalance of those impulses in a smaller capacity until you either close above here, close under here, and then start doing more things outside of the internal range. But that's pretty much all we have right now as far as gold goes. Y'all make sure y'all comment. Let me know what I may have missed or what you liked about that read, and share that with somebody who needs a little help out here.